Hello, everybody. This is Jason here with Level Head Trading, giving an update on the overall markets. So, I'm going to start with my general thesis that the market is due for some pretty big consolidation. Again, this is just my opinion, but let's just look at the charts. So, starting off with I would say, kind of the most important one, the S&P 500. I'm showing you the daily time frame here. So what we have right now with an hour and a half left in the trading day, we have an engulfing candle to the previous day, which will mark the top for now. And it marks daily consolidation. Once you completely cover the previous day's candle, and especially if this was at a very all-time high price or an all-time low price, or just a range of prices where this is the top of the range or the bottom of the range, that generally marks a reversal. So that's the S&P 500 on the daily chart. So I use these lines, the 12 period and the 26 period exponential moving averages. So if it were to hold that 12 period moving average, that would be considered healthy, and that would currently bring it down to about 575, which would be about another percent in downside. So that is how S&P 500 looks. Let's now go to technology and the Qs, QQQ. So I'm going to pull up this. Same thing as far as daily consolidation. Let me just make sure I do have it on the daily chart. So again, marking a top, and this is almost at all-time highs. It wasn't quite at all-time highs. That was all the way back here, July. So we ran up and we ran up, and we created daily higher highs, higher lows, higher high, higher low, higher high. So at the moment, it's a daily higher low. You need to hold this level here down at 487.97. So let's say 488. That's probably the weekly level. So I'll draw a line there. That would be the weekly line, I'm going to assume. So let's draw that on here, and then I'll zoom out to the weekly time frame and show you. So daily consolidation is on the way. As far as the weekly chart, that is most likely the level that you'd have to hold to say that it's healthy weekly consolidation. So there it is right there. So you have the upper wick on that previous week to this week here, and that was the low. That was the farthest you were able to pull back, and then you continued and made a weekly higher low. So this is the most recent weekly higher low down at that 477. That's 477. So right now, this is the Tuesday, so we still have a lot left in the week to go. So that's how QQQ stands. Now, semiconductors, they've been getting hit really hard today. So this is how it looks on the semiconductors. And what I have here, I'm going to show you first, because that was the weekly chart. So I'm going to show you how much more drawdown there is on semiconductors. So this is the daily chart, first off. So to me, it looks like we're going to test that 200-day moving average, which is all the way down here. 227.63 is the 200-day moving average. So that's another 20 points lower from here. So definitely you have daily consolidation, but more importantly than daily consolidation, you actually now have weekly consolidation shaping up because there was the previous week's candle. And if we were to break 246.31, we would have weekly consolidation. So we have the weekly drawdown here, and then the weekly lower high, weekly higher low, weekly higher high, weekly higher low, weekly higher high. So that's the level there, 237. That's the last weekly higher low. But like I said, we're just on Tuesday here, so we have quite a bit of finding out for this week as to where things will line up at the end of the week. So what's holding up the S&P 500 as for now is the financial sector. So I have it on the daily chart. You got pretty much almost to overbought at 68.78. But notice how this candle is shaping up today. As I said, we have an hour and 20 minutes left in the market. It gapped up, marking an all-time high, but this is how it's looking so far. So it gapped up, but it's starting to give it back. So, and then we have earnings today. So there's no news on the earnings yet. So it just ran up and ran up and ran up. So if this pulls back much more, that's going to affect the S&P because this is the top dog as far as upside. And if that has any kind of significant drawdown, that's going to affect the S&P 500 unless we can get rotation into, say, QQQs. So that's how the financial sector is looking. So now let's go into some individual things. I'm going to go to NVIDIA. So again, we have NVIDIA on the daily chart. So again, we have daily consolidation, but notice how it's reacted today so far off of the 12-period moving average. So there's daily consolidation on the way. Notice that we have volume increasing. That's going to be a pretty big volume day on the downside compared to all these other days. You know, it's been a while since we had a really big downside day. That was the last one back there on October 1st. So that is NVIDIA, and bringing up on the weekly chart, let's see how that compares to semiconductors overall, because actually, you know, that's the lead dog in semiconductors. So on the weekly, it still looks fine. You would have to break the low of 115. So that's quite a bit of downside from here. That's more than 10% away. But again, you topped out at 139.60. The previous all-time high was 140.76. So to me, that looks like a double top because you would have to get back up there and break it in order to make a new all-time high relative to this one back in June of 2024. So to me, that's a double top. So that's something to watch out for and see how far of a drawdown we get as far as daily consolidation. So again, there's the daily picture, increasing volume. Yeah, so that's about all I have to say about that. So a lot of you are probably Tesla fans, or maybe you're not Tesla fans, but a lot of people trade Tesla. So I'm going to go into Tesla now. And this is the action. I honestly don't, I haven't been following really news about Tesla, but I don't know what happened on this fall here back on Friday. But as far as the fall, there's a big gap from the bottom of this wick. That's 232, and at the moment we're just kind of holding on by a thread here. The low was yesterday at 213.74. Yes, but we're not really making much progress on the upside. So I'm looking at this as a potential daily bear flag. If we break the low of 213.74, then in my opinion, you're going to be testing that 200-day moving average, which currently sits at 201.96. The other thing is you have the daily, this is the daily chart, so you have the EMA just crossing now over under the 26 period. So again, I use the 12 period. When you're holding above it, that's very strong. And then when they start to cross, that's a negative sign there. So, we're probably going to have some choppiness, maybe for the next few days. But if the market pulls back any more significantly, then I'm going to expect this to be a daily bear flag and that we would probably fall back down into that $200 range, which is the last area that you made. This was really the last significant higher low which was at 210. So you're $10 away from this 210 higher low. The reason I call that the higher low is because from here you have the higher high, higher low, higher high. That's your biggest pullback you could make relative to this one. So that's the first level that you'd want to be watching out for, is that 210. So that's how Tesla's looking. Now I'm going to go and jump into Bitcoin. I think I'll make this my last one. Bitcoin's been on a tear, but what I would say to watch out for is at the moment it's going inverse to most other things. The semiconductors were the lead compared to Bitcoin, and now Bitcoin has caught up as far as their upside and how close they got to their all-time highs. I think Bitcoin got within about 10% of its all-time high, and the same thing with the semiconductors. Not today with semiconductors, but prior to today, they both were approximately 10 to 11% from their all-time highs. But if the overall market pulls back, I'm going to say that Bitcoin is going to top out here. Here's the most recent level. Oh, and I want to point this out. So I'm going to go on the weekly chart, and I had noticed this. This was quite notable to me. So going out on a bigger time frame, looking at all the most recent tops that Bitcoin has reached, they've been approximately $2,000 lower than the previous top. What do I mean by that? So the all-time high, 73,835, okay? You go over here, 71,980. That's basically $2,000 difference, double top right there. So then we pull back, and then the next top you make is 70,000. Where's that relative to the last top? 71,974, about a $2,000 difference. So if you go to this top, the most recent prior to now, 70,000, we got to 67,944. So from 70 to 67,944 again is another 2,000. That's no coincidence. So I'll draw this descending trend line on the top to show you again what I'm talking about. And this is very valid because if I just draw it from the tops, that is what's happening. You know, we're making some, nice gains from the bottom, but we're not making a new high relative to the previous high. So that's what I'm looking out for with Bitcoin, assuming that this is going to be the latest in a series of lower highs on the bigger time frame. So that's where we stand, and I'll wrap it up right here. So that's my video for today. If any of you are new and are not subscribed, I'd appreciate it if you would, and I'll check back with you soon. Have a good day, and use stop losses.